The Leonardo Fibonacci was an Italian mathematician who identified certain patterns among the numbers. So the basic pattern he identified was, if you keep on adding the two numbers from the previous number, you will get the next number as follows. So if you add 1 plus 2, that you will get 3. If you add 3 plus 5, you will get 8. And if you add 8 plus 13, you will get 21. And if you add 21 plus 13, you will get 34, and so on. And after identifying this particular pattern, he identified the another pattern, that if you divide the next number with the previous number, just like if you divide 5 by 3, then you will get a number 1.618. If you divide 13 by 8, you will get the same number, that is 1.618. If you divide 8 by 5, you will get the same number, 1.618. And if you divide any of the next number with its preceding number, you will get the same number, that is 1.618. So Leonardo Fibonacci have identified a certain pattern, and this particular number is known as the golden ratio. And the inverse of this golden ratio is 0.168. Now this golden ratio has been seen among many things in the universe. It has been seen the same pattern among the leaves, among the galaxies, among the Google logo, inside the painting of Mona Lisa, and other prominent things. So this is considered as the universal number and very important number. So in financial analysis, Fibonacci charts are very helpful to identify the support and the resistance level. These do not provide us when to buy and when to sell, but these provide us a reasonable criteria of support and resistance level. So if we go and see a uptrending market, you can see here that this is an upside trending market, because this is making higher highs. This is making higher highs. And if you want to insert a Fibonacci level here, so if I go inside the charts, and if you go and see and select the Fibonacci retracements, so for Fibonacci retracements, you always need to take the lowest point of any uptrend. So this was an uptrend, as you can see, this is the uptrend, and from this uptrend, this is the lowest point. So if you select the lowest point and go till the highest point of this uptrend, as you can see here, this is the highest point of this uptrend, you will get different levels of Fibonacci. Now how these number arrive? These all number arrive using the golden ratio, that is 1.618. There are different mathematical rules for that, but these all are considered the relatives of Fibonacci numbers. Now if you see that you have selected this particular thing, every level, if you see this 23.6%, or you can call it 0.236, you see this 78.6%, or you call it 0.786, all of these levels are the Fibonacci levels. So in an uptrend, Fibonacci tries to explain you the different support levels. So if you go and see, this 23.6% level is also one support level, this 38.2% is also one support level, this 78.6% is also one of the support level. So inside an uptrend, this keep on telling you the different categories of support level. So if you go and see one stock, and if I choose one uptrending stock, so this is our uptrending stock, and I am selecting the Fibonacci retracement here, and this is our bottom and this is our top. So if I select this area, you can see that these lines, all of these lines, this 23.6%, these 38.2%, this 61.8%, everything is representing as a Fibonacci number. So if you see that the stock is showing a good support level at 61.8%. So what happens is that whenever you are entering into the market, let's suppose you entered into the market at any point of time in the stock, and you entered at this lower point. Now you know that if it's increasing, after an increase, if it's started to decrease, these points can work as a support level. Now nobody in the world can tell exactly which will be the support level out of 1, 2, 3, 4, 5 or 6 points. Nobody can tell the exact support points, but these all are treated and considered as a support level, as you see in the news and the market, that the analyst keep on telling you instantly that this should be the support level and this should be the target level. So these are the ways through which they provide you the support and the target level. So the 61.8% level, this is showing a good support level because the price has increased and decreased and then again increased and then again decreased, but it's not breaching the support level of 61.8% right now. So these Fibonacci numbers help you to identify the support and resistance level. And if I show you the same thing on a downside market, so as you can see here, you can see here that the market is constantly reducing here. So in the case of downside market, you have to create a line again for Fibonacci numbers. So in the downside market, if I again choose the Fibonacci retracement and I select the highest point towards the lowest point, which is this particular point. So on a downside market, the Fibonacci numbers show you the resistance level at which over which your stock should not go. So all of these numbers, all of these levels, as you can see here, all of these levels, this 1.618 level, this 1 level, this 0.786 level, and all of these levels are representing as a resistance level. And the best resistance level, as you can see, this particular area around 2.618, that is this whole area, is working as a good resistance level in the case of Fibonacci number here. As you can see, this whole area is known as a good resistance level because this is going towards this resistance level. So Fibonacci numbers keep on telling you the support and resistance level. Also, in the case of Fibonacci numbers, you can use this for ensuring your target profits and target share price. So if we go and we want to identify not the support and resistance level, but we want to identify our target price. So in that case, what we need to do, you have to be very clear and precise in this case, because in the Fibonacci retracement, we will call it Fibonacci extensions. So in an uptrending market, as you can see here, in an uptrending market, if you select from low point towards the high point, you will get the support level. So as you can see here, that these all are working as a support level for this particular stock. As you can see here, that these all are working as a support level for this particular stock, and this is a very good support level because beyond this point the stock is not reducing in its price and it's again reversing back. But what if you want to know about your target levels, that is at which target price you should sell? So in that case, if we make the chart, see this thing very clearly, if we in an uptrending market, if we were making our Fibonacci chart from uptrending market from lower to high, but if we make our chart from high to low, if we make our chart from high to low, in that case we will get our target prices also. So in this case, if you have selected this particular low, high to low situation, and let's suppose you have purchased stock at this particular lowest point, that is 125 around, you can see here 125 is written here. So you can purchase, you have purchased your stock here. Now these all levels are your target level, that you can sell your stock at 130, your next target level can be 133, your next target level can be 135 and 137 and so on. So the Fibonacci numbers are widely used by multiple people in an uptrending market or downtrending market to identify what should be the exact stop loss, what should be the target, and other criteria for them. Also, let's suppose you are in a downtrend market. So in a downtrending market, let me select this chart, and let's suppose you are in a downtrending market. So inside a downtrend market, if you use the Fibonacci retracement, you can see that if you select the top and low side, then you will get the resistance level. As you can see that the 78.6% level is working as a resistance level because the price is decreasing, increasing, then decreasing, increasing, then decreasing, increasing, but it's revolving around this 78 point. As you can see here, this is not breaching this 78.6% level. As you can see here, the prices are going towards this direction. But what if you want to know your targets in this case also. So in the downtrending market, if you select your Fibonacci charts as follows, as I am showing you, I am choosing the Fibonacci retracement, but in a downtrending market, if you choose it in a reverse manner from high low to high pattern, as just like me, I have done it from this low to high. So in this case you will get different levels of your target. So if you are short selling the stock, you're at price of 504, then your first target can be 460, the next target level can be 434, the next target can be 412, and so on. So in the case of Fibonacci, you need to identify different patterns, but at the same time, I just suggest you not to use any single tool individually, but to use all of the available tools simultaneously to get the clear signal about what needs to be done. But Fibonacci provide you a reasonable thing about the support and resistance level along with your targets and the stop loss criterias. Use the Fibonacci levels to ensure that you are holding at good support and resistance level. As you can see here that at this particular level of Fibonacci, the 78.6%, this level is working as a new support level for the stock. As you can see here, this whole line is working as a new support level at this particular point of time, although there is one single candle, but that is also reversing and there are multiple candles above this support level. So Fibonacci are important tool to identify and learn. So the Fibonacci retracement is an uptrend, so it shows the support level as we had seen. A Fibonacci retracement in downtrend, it shows the resistance level, but in the case of extension, the uptrend shows the resistance level and the downtrend shows the support level. You can identify your stop losses, you can identify your targets, and you can identify when to enter and when to exit.